The Rand and local index hopes to start the week on a firmer footing after losses in the tail end of last week. The currency was weaker on Friday, while metals helped the JSE from the session's worst levels as investors considered inflation and geopolitical threats. Let's get an overview now of the latest market movements with JustOneLap founder Simon Brown. Simon, good morning. Give us an overview as a starting point of how the local index is so far faring this morning.
We after a massive rally in commodities on Friday last week, and truthfully Monday last week as well, we're coming back to earth a bit. The overall market down 0.9%. Commodities, the big red there. Resources down 2.5%. We've got industrials off 0.6%. Financials bucking the trend. They're trading 0.4% higher as we speak. On the Rand front, we've got the Rand against the dollar at 18.87, 23.53 against sterling, and 20.09 against the euro. On commodities, we're seeing weakness across the board. Gold futures, $2,371 an ounce. Brent oil, $89.66. Platinum at $9.86, and palladium, $1,053 an ounce.
Let's talk about gold. It's still hovering near those record high levels that it hit in the previous session because, traders were keeping this close eye on developments surrounding the Middle East conflict as well. Where is gold sitting now, and how much does this volatility affect it?
Yeah, so we're a little bit weaker. Truthfully, it sold off late in the New York session Friday evening. We were closed already for the weekend. It did sell off. There are two drivers to it. When you mentioned the concerns around conflict in the Middle East, certainly that happened. But, for example, Iran has said, nope, that's it, they've done now. They've had their response to their Damascus embassy being attacked. Of the 300-odd drones and the like that were fired, it seems that literally only a handful actually got through. So there is hope that those tensions can sort of simmer down, although ideally, of course, the war to be over. That's not going to happen in a hurry, it seems. The other side is just good old-fashioned inflation and interest rates. We had U.S. rates out inflation last week, and it was high again. We're sitting at a 6-month high in the U.S., and concerns that we're going to see interest rates and inflation higher for longer has also been feeding the gold rally.
One to certainly watch in the coming days. So let's talk about Accelerate Property Fund, the owner of 50% of Four Ways Mall. They've asked existing shareholders to contribute as much as 300 million rand to the issue of new shares. All right, to help us make sense of these developments and essentially what shareholders need to know here.
Yeah, so in essence, as you said, it's a capital raise, 300 million. They could have gone to the bank. They could have done a book build. This, in my sense, I like. It's more sort of democratic in a sense. All existing shareholders will be able to apply for, I think it's around 32 new shares for every 100 that they hold, and you pay 40 cents per share. This is about a 30% discount to where they had been trading last week. So it means that shareholders can elect to increase their position in the company. If they don't want to, they can take that right, which we call a nil-paid letter, because we love jargon. They can take that right to buy the new shares and actually sell it into the market if they don't want to extend their holdings in Accelerate Property Fund.
Well, let's round it off with Kumba. It's refined its production strategy as Transnet falters, opting for producing high-quality iron ore. What does this mean for the group's service offering going forward?
Yeah, this is actually quite a clever strategy. So they've had a problem for a while now where they can simply mine a lot more than they can get out to the Secunda port and where it gets exported to the rest of the world. So they're saying, let us rather mine what is higher quality and therefore gives us a better price per ton. Now, Kumba is typically a higher quality iron ore mine regardless. But even within that, they've got areas of it which is a higher concentrate of the iron ore per ton. So they're going to focus on that. It does mean that they're not going to get more tons to port until such time as Transnet can get that railway line operating efficiently. But it does mean that they will get more revenue per ton. So from them, a clever move to sort of keep the business going whilst they struggle with logistical challenges.
You certainly need to innovate and take some of those calculated risks. Simon Brown, thank you as always for talking to us. We appreciate your time. JustOneLap founder Simon Brown.